Hey traders, Nick here on Sunday night. We are game planning the week, so this is the market update. It's going to be pretty straightforward as far as concept. I'm going to start by talking about two emotional catalysts this week. One is the Federal Reserve. The FOMC meets on Tuesday. They meet for 2 days and they will talk to us on Wednesday and they tell us what they decided. I don't believe anybody's expecting them to raise one more time, but I believe there's a lot riding on what they say and how they say it. So it is my opinion. Of course, it's not fact. It is my opinion. I think that the market has priced in some sort of a change in the message, higher, longer. The message from the Fed has been, oh, we're going to raise rates to a higher level, a longer period of time. If they switch from that, that will be a switch in their position, and that might, if it doesn't come, it might be disappointing to the market. Some people are even looking to hear about rate cuts, and I just don't know why that would be. Usually the Fed cuts rates when there's a problem in the economy, and right now we're not as hot as far as inflation, but the economy is still fully employed, etc., etc. So this is the emotional part, number one. The second emotional part, which comes before it, it's a little wrinkle. On Tuesday we have inflation, which comes to adding more guesswork. It will cause red or green ticks. There's no doubt about it because the market is focused. Tuesday, Wednesday, there's going to be red and green ticks based on headlines. I don't think the headlines will be game changers unless the Fed actually says they're done. That would be a surprise to me that they go from higher, longer to we're done. We'll see. All right, so this is from the emotional catalyst. So let's talk about lines on the charts. You're looking at the S&P, and it's going to be a very straightforward message. You're not going to believe what happened, right? Maybe I should start with the Dow, with the concept of the Dow. We are at all-time highs, believe it or not. The Dow was 75 cents, I think, from a closing all-time high on Friday. So the Nasdaq is like within 4% of an absolute all-time high. And the S&P is trying to break out from this little summer battle right there. The summer battle you can consider 460 SPY, okay? We are a little bit above. We may fall a little bit below overnight or tomorrow, but we are trying to break out from it. Well, technically, if we actually establish the breakout, not just poke, close, come back and fight over it and then come back above it, the upside is like huge. I mean, we're talking, I'm embarrassed to say the number. Let's say 30 points, it could be as much as 102 points, 90 to 102. So that doesn't mean I load up long. The same statement for the last 3 weeks. The bulls are overly confident and now everything is going their way. And the bears are overly upset about it. And this is where emotions may come into play and we may make mistakes. So I would caution anybody to have so much conviction. So on the charts, 460 is a pivot point for the bulls. There has been a period of time going back to early 2022 that puts in play 465 and 470 as a pivot zone. So yeah, we may go above 460, but we're going to struggle through 65 and 70. There are some battles there. Look at it on the chart. We have one line here at 460, and if we go all the way back, we're talking March, January, and February of 2022, right? 2021. The end of 2021 was a huge breakout for everything under the sun. And we are almost back to it. Remember how crazy it was? Some stocks that had no business being up there? Well, the IWM still is way down below that. And that's where those stocks live. Okay. So this is a little bit different than 2021 and 2022 when we failed. These companies are better. Nevertheless, we are at all-time highs. So be careful shorting because you hate it. And be careful overcommitting long because you love it. All right, we still have some problems to deal with. This is a visual on the Nasdaq, the QQQ, and you can see how the Nasdaq has gone above their prior fail, which was the summer of this year, and then gone back below it and is going to go back above it. So I would say if the QQQ goes to 395 or higher, they would have, in essence, guaranteed themselves a breakout. They would have confirmed the breakout. And the upside potential just from this little jaunt here would be around this 420 area, which would be an all-time high. So this is the 2021 like huge breakout crash from COVID. Okay, so we fell 30%, whatever we fell from that. We're just back at it. Can you believe it? But yeah, we are back at it. Climbing the wall of worries, as they say. All right, so that's the visual for the Nasdaq. And the Dow is even worse because the Dow was actually at a closing high. So if you put a weekly candle up there, look at it. This was the highest weekly candle close, these two, and this is where we're at too also. So they too are looking to bust out. All right, so the small caps, that's where the ARK-like companies live, when everybody out of COVID loved it. they're still trying to consolidate. That's the high, and they're still trying to consolidate, which could end badly if they wanted to, but they would have to drop from here to here and then lose that, and they end up here. But that is now everybody's looking up. So the problem with the other markets breaking out is I don't think it can happen unless the IWM breaks out of 200 convincingly, so they can take out these three peaks. So I guess if I wanted to turn off the news and focus on one thing, I believe the IWM needs to break out of 200. So this is the catch-up trade that needs to happen if it does want to happen. Until then, there are sellers from here to 190, 191 on the IWM. So focus on these numbers. Here's the big picture again. The SPY, the QQQ, and the DIA are at or breaking out into new all-time high. They have patterns, they have like inches to go, and they're gone. They're on the goal line. This guy is still inside its end zone, if you want to talk football. So they're not out of the gate yet. Above 200, that's out of one gate to get to the gate. So they're still ping-ponging, and these are months. This is a weekly candle. Every 4 of these is 1 month. So these are months. That's the big picture. Within it, everything has to work. What do I mean? If I'm betting up on Apple, which by the way is again $3 trillion, if I'm betting up on Apple, it has to work inside the market. So historically, I'm told that this week should be negative. This week is also when I expect some big money to start making moves for the end of the year. So the word again is tactical. I'm not getting committed to going long, for example, Microsoft at an all-time high or Apple near an all-time high. I would tactically trade them from point A to point B, but I would hold back from committing capital all in from here to wherever. Also, you notice that crypto is back to its glory days, which is something that we forecasted. Risk appetite, again, is it's very well healthy. You know, they don't buy crypto, which is considered crap, right? For a lot of people, you know, it wouldn't get bid if the markets were scared. Scared markets hunker down. They buy quality. They don't buy crypto. Hedging our bets is smart. If I'm long, I want to take a few bearish positions. If I'm short, I want to take a few bullish positions just to balance my books. I can do that via indices or via strategies within the stock itself. I will update us on the progress within the week. I will try to do another video. It's an important week.